just by
And
getting
I've
the
gotten
information.
comments already from people who have already subscribed to Audible and gotten the book, and they said like, "Oh, I love the book, so thank you so much." They love your narration, and I've been getting video direct messages already, and I didn't expect it that quickly. They're like, "I was the first one. Once I saw that link, I just went and got it."
Everything you've learned about money is wrong. In fact, money doesn't even exist. I learned that from Jim Chuong, who's written a book called Financial Freedom Now. He's lived it. From the age of 14, he's been studying how money works and how you can get it to work for you. And he's condensed it all into a great book called Financial Freedom Now. Learn how to escape middle-class poverty and make money work for you. And I was chosen to narrate the audiobook version of the book. And so I've had a chat with him. Check him out. He's real. He's a top guy, and he's been there and he's done it. He became a millionaire in his 30s. And you could follow his system to where it led him. Now, if you'd like to get the book for free, stick around to the end of our chat, and I'll tell you how you can do it. Won't cost you anything. Check it out. This is my chat with Jim Chuong.
I've never created an audiobook before, and you were extremely professional, extremely efficient, a pleasure to work with. And I just wanted to thank you for just being so great with my first audiobook.
Well, thank you. You were a joy to work with too, because for people who don't know how it's done, or the way I do it anyway, I do it in stages and send you in installments, basically, and say, like, make sure we've got this right, make sure you're happy with this, and then I'll move on.
That was perfect. I had no idea.
Yeah.
So
but
was
it was
amazing.
It was such a learning experience for me too, because I've certainly not had the kind of financial education that was delivered in the audiobook. Hooly dooly.
So with regards to the books that you generally speak about, so with this type of financial literacy book, is that a large component of the books that you've come across, or is it mostly other types of genres?
I do all sorts. This is the first financial literacy one, but I've done business books before about, motivation and tips for working remotely has been quite a big one recently, funnily enough.
Interesting.
But also I do a lot of fiction, science fiction, romance, right across the board. So it keeps the variety there. So, this afternoon I'm doing marketing for painters and decorators. So,
wow.
Yeah, and then
have like a wealth of knowledge just from all this content. Is unbelievable.
Yesterday I was doing one about the Cray twins, who are quite famous gangland criminals from the 1960s in London. So yeah, it's quite the range.
From painting
quite the range.
to mobsters.
Yeah.
I love your studio. That's amazing.
Thank you.
Where is that actually?
It's in my home. It is.
Get out.
It up until May this year, it was a closet.
So you got the soundproofing in there. You closed it all off.
Yeah, got that all up. Got the professional mic, the mixing unit, the whole thing. Because I also do my my radio show from here too now, because of COVID.
Oh, I never thought about that.
So I do.
So you used to go into a studio.
Oh yeah.
In-house.
Yeah, I used to go into London. Now I do it all here because I'm about 30 miles north of London. It's a train, it's a 35-40 minute train ride into London. I don't need to do that now. My commute is literally from the bedroom into
that. It's amazing. Are you wearing pajamas? I can't even see.
No, I dressed up.
I'm just kidding.
I dressed up for you. Okay.
Thanks, Creo. Okay.
So Jim Chuong, terrific audiobook. And first of all, thank you so much for choosing me to be your narrator and producer for the book, because I learned a lot from it, and it was a lot more than I was expecting. I was expecting a pretty cold, nuts and bolts, numbers book, but I was delighted to find out how biographical it was, and how I found out about you, and how this is real, and you've done it. You've worked it all out at a very young age. You were 14 when you started on the basics of this. So it was a terrific thing. The book is called Financial Freedom Now, learn how to escape middle-class poverty and make money work for you, which is a pretty big claim. First of all, let's just walk people through it. What is financial freedom?
There's a couple of definitions. That's a fantastic question, Graham. So there's a couple ways you can look at it. You can look at it as you have passive income that covers all your expenses. So once you have enough income or enough assets to cover all your expenses, at that point, because your investments are providing for you, work becomes optional at that point. You can work full-time, you can work part-time, or you can work not at all. Because at that point, the extra income from trading your life for money at a job is just that, extra. Mm-hmm. There's another way of looking at financial freedom is that you have the knowledge in order to become successful. So you don't have the assets and the income yet, but you have the knowledge so that the stress and the anxiety of money no longer hold power over you. Because a lot of times people, the biggest advantage of financial freedom is not necessarily that you can buy whatever you want or go wherever you want and do as you please, but you're relieved of the anxiety of like, where is this money going to come from? What's going to happen if this happens, or if I lose my job, or if so-and-so passes, or if this person gets ill, or if I have a fender bender in a car accident? I don't know where the money's going to come from. That kind of anxiety hangs over a lot of us. And being literate and financially free means that you're sort of relieved of that type of stress because you know what the path is. You just have to follow the path. You have a blueprint, as it were.
And it seems to me that a lot of us go about it the opposite way. For instance, you make the point in the book that your home, the one you live in, is not an investment, which goes against most of the things we're taught by parents and well-meaning people. And it seems that we end up getting into something at a very young age, maybe when we first got married or we first got together with our hopeful life partner, that we get into this, we dig this huge hole of debt. Can you just talk us through how that is wrong and what people should really do?
So that's a fantastic observation you made in the book. So we're taught at a very early age, not necessarily explicitly, but just from seeing what our friends, our peers, our parents, our relatives are doing. And what they're doing is they're mischaracterizing assets as all being good. So a house is the biggest example. My house is an asset. My house is my biggest investment. Because they don't understand or they're not financially literate, they sort of mash all assets together. And the house is the biggest one because it costs so much. It costs so much, and it could literally sink someone who's not prepared to carry all the expenses associated with the house. So in general, there are two types of assets. There are only two. One type is productive assets that generate cash flow or some sort of product or service that people will pay for. If someone's willing to pay for something, that is a product or service that they want. They want it enough to pay for, and if that asset generates it, that asset is considered productive. Now, on the other hand, there's other assets that they don't really do anything. They don't produce a service, they don't produce a good that other people are willing to pay for. Those are non-productive assets. Now, assets in general, they're just all lumped together. People just call them, oh, it's an asset. An asset, all that means is that it can be sold. If you can sell something for $1, that's an asset because it has a liquidation value. If you cannot sell it, it's not an asset. It just has no value. So a house being used as shelter is non-productive. It doesn't produce a good or a service. You have to live in it. You have to pay taxes on it. You have to pay maintenance, capital expenditures, the roof, the water, the heating and cooling, the electricity, the insurance. You have to keep paying. So that asset just sits there. It doesn't provide any value in terms of a good or service, but the person using it as shelter has to keep paying. They have to keep paying, keep paying. It's similar to other assets of that class, cryptocurrency, gold, a car, those type of assets. So The financially free are not any more hardworking. They're not any more. I can definitely tell you they're not more intelligent. I just tell you right now. But all they do is they just swap. They just swap how they purchase assets. So people who are going through the conventional education system or listening to the parents, they purchase all their non-productive assets first. So the expensive post-secondary degree, the expensive house, the nice car, the fancy wedding. So what this is, when you load up at the beginning of your life with non-productive assets, it takes a lot of money to maintain and carry them and insure them. And where's that money coming from? Because there's no investments, it has to come from me. I have to pay for it. So all the financially free do is they swap it. And so instead of sinking all that money into the non-productive, they minimize the money they pay for those things, and instead they front load into a U.S. index or rental real estate or a chain of ATMs or vending machines or laundromats. So that produces some cash flow, and that has two benefits. Number one, obviously, like I mentioned, it starts producing cash so that the investor can use. And number two, compounding works best when you're young. When I was 18 or 19, if I started investing then, because I have a longer runway, it works very well. So the double benefit of switching the order was that your investments get in early. It starts building because of inflation and also because of cash flow, and it provides for your living. And then you pay for all the other stuff later. So you pay for the upgraded house, the better car, the fancier vacation later. But then at that point, because you've invested early, the cash that's being used to pay for those expenses is not coming from your labor or as much labor as you would otherwise do if you put everything in the front. So it really is just swapping a mindset as opposed to say, listen, I'm 20, I want to get into the biggest house possible and drive the fanciest car and wear the best clothes. And that's where people get into a lot of trouble.
And the book takes you through that. What I really like about the book, because people would be forgiven when they see a title like Financial Freedom, Learn How to Escape Middle-Class Poverty and Make Money Work for You. They think, oh yeah, it's a get-rich-quick book. And it's actually the opposite of that. It is a get-rich-gradually book.
It is true.
And because it is so real. So let's go back to the very beginning to talk about your life, because I think this is important to get an understanding of how you got to the point at 14 years old where you had this epiphany. So you were an immigrant into Canada, but you were born in Canada to an immigrant family. If you could just take us from that point there, what shaped your beginnings?
Sure. Fantastic question. So going back to actually your comment about get rich quick, I will tell you almost with certainty that anything that says that they're get rich quick is get poor quicker. So do not,
Yeah. And this book is the absolute opposite of that. This is a get rich gradually book. Yeah.
That's right. Get rich for sure. Take the right steps,
Yeah.
It's like everyone's an overnight success, but if you look behind the curtain, it all took 20 or 30 years to become that overnight success. Yeah. As I'm sure you can attest to, right? It's like, you're an overnight success. You're so lucky. I've only been grinding for 3 decades.
Exactly. Yeah.
So, yeah, that's correct. I was born first generation in Canada. My parents came over here. I'm basically lucky to be here. My dad came from Mauritius. And my mom came from Indonesia, and then a generation before that, it was in China, and they came to Canada. So I was here, and I was under a lot of pressure from immigrant parents. They were of the mind that you are not native to this country. You need to study twice as hard, work 3 times harder, get highest marks, and move up that way for them to be able to have the same success as those who are locally born in Canada. So I listened, as a good child. I just sort of took their word for it, and I just started studying all the time. And they made sure that I had enough to study, a lot of homework to do, extra work if school didn't provide enough. And I did this for a number of years. I just kept studying extra courses. And at a certain point when I was 14, or before going to junior high school, my parents wanted me to get on something called the honor roll, which is an 80% mark or higher. So when I got on that, I was very proud, but my parents were not impressed. You know, they were always of the mind, whatever mark you get, unless it's 100, it could be better, which technically is true, but it puts a lot of pressure on a child. And so as I kept grinding and I was getting all the marks, and I was even strategizing. The neurosis got so bad that I was strategizing, because I knew, for example, that my English teacher would only give me a certain mark, like 75. So to compensate for 75, I would need a 90, 95, or 100 in something else. So I was balancing this game of trying to get the highest mark. At a certain point at 14, I said, why am I doing this? All I'm getting after getting higher and higher marks, and I ended off, I think, when I was 14 or 15 with something like a 93 point something average, like overall of all my courses. And I said, the only thing I have to look forward to is another year of this, another year of grinding. Where am I going? So I asked my parents, I said, where am I going with this? What makes you want me to do this? And so they sat me down after dinner and they said, this is how things work. So this is the story. And I was like, this is great. Now I know why I am suffering so much. And they said, when you study hard, you get better marks. And when you get better marks, you get to go to the high school of your choice. Every high school will want to have someone who's such a high performer. I said, okay, that means I have to do all this in high school. And then what? Well, then if you do the same thing in high school, you get to go to the university of your choice. And at that point, you can pick any discipline that you want. And I said, and then keep doing that again. And they said, yes. And I said, then what happens? Then after that, all these multinational companies will want to hire you because of your intelligence and your skill set and your marks. And then you will become able to you'll be able to earn a living and be financially free. And I said, so this is another 10-year plan about money. Like the end game, from what I can understand as a 14-year-old, is money. This is the game. And they said, yes, that is the game that everyone's playing. And this was a mistake, and I stopped the conversation after this. But I said, I don't think that's right. Well, I didn't say that. I said, why don't we study money now and skip the next 10 years of suffering?
You cannot argue with that logic.
It's true. I thought. I said, how about that? Because I'm sure if I spent 10 years studying as hard as I did for that other stuff, if I studied that hard about money and financial literacy, in 10 years, I must be better off than I am now. And all my parents said, because either they didn't know or they didn't want to be embarrassed or they just wanted to shut me down, they just said, it doesn't work that way. It doesn't work that way. Conversation's over. And I couldn't sleep that night. I was like, this is the first time that I thought my parents, I don't think, know what's going on. They might be wrong. This is the first time where you're thinking maybe that my parents aren't right all the time. So I was lying there and I was thinking they can't be right, because this pattern or this method that they're telling me, everybody's following it. All my classmates are doing the same thing. My parents did the same thing. My relatives did the same thing. Their friends are doing the same thing. But I have never met a single one. I had not met one who said, I followed this path. I landed the dream job. I worked, and now I have no cares about money. I am free. Never met one person like that. And I said, the evidence is very clear. This path doesn't lead to what I think it leads to. All I would need is one piece of evidence. And the second thing I thought about, and I knew as a 14-year-old that they were wealthy people. I'm pretty sure they were wealthy people. I read about them. I see them in the papers. I watch them on the telly. And then I said, I don't think they got there by working 80 hours every day, 24/7 at the highest. I never heard a wealthy person or a businessman say, yeah, I made it here because I earned a very high hourly rate and I worked a lot of hours. It's never that. So I said there must be something that they're doing that is different than what I'm doing, because it can't be right. And I started skipping school, which was a bad idea. But, well, I mean, I guess it was a good idea in retrospect. But I started skipping school. And then my thought was, there must have been someone in the history of mankind who became wealthy and wrote down how they did it. It must be documented somewhere. I'm sure someone has we didn't have podcasts and this, face-to-face chats and YouTube. We didn't have any of that. All we had were books. That's all I had. So I said, someone must have documented it. And if they did document it, it must be in a book. So it must be in the library or it must be in the bookstore. That is where the secret really is. And so I just started scouring the personal finance section at my local bookstore, at the library, everywhere I can get a hold of. And even the newspapers, because there's actually entire newspapers like the Financial Times, Barron's, New York, the Wall Street Journal, that are entirely dedicated to money. This must be where the information is. And long story short, it wasn't in the newspaper. But anyway, besides that, but I found books where people did write about how they accumulated wealth to become financially free. And I slowly pieced it together. I made a lot of mistakes, a lot of wrong turns, a lot of assumptions that were incorrect, because I had to break my old indoctrination about how money was made. And I had to learn that money really isn't real. It's not a real thing. It's not tied to time. Time is an illusion. Like an animal in the forest doesn't care if it's Monday or Friday. They don't care. It's just time is just irrelevant to them. It's like, you need to do this thing to do that. And so I had to break down, and the money's not real. So my mom and my dad felt that money was real. So they would hold on to money. $1,000 was $1,000. You could hang it on. The money is it's called a current for a reason. It moves and flows. It comes into your hand. It goes out for groceries. It comes into your hand from another source, and it flows out for a car. It doesn't stay. That's how economies are run. Money is just handed from one person, one custodian to another custodian. Money is very fungible. So I had to break all these ideas about money, personal finance, and wealth before I was able to move forward.
And who were the guys that did influence? You say you made a lot of mistakes, so there was probably a lot of bad information about there. But the guys that had the good information, who were the kind of guys you were looking up to, your heroes, your financial heroes at the time?
That's a great question. So I was misled by late night television, get rich quick, like we were talking about earlier. I was just, getting poor quicker. And the newspaper was all sensationalized. It didn't have any useful information for me. And then I bumped into some books. So this is how I picked a book. As a 14-year-old, this is how you pick a finance book. So as a 14-year-old, when you go into the personal finance section, it looks like English, but you don't understand anything. It's very similar to when you listen to doctors speaking. Yeah. When two doctors are speaking, it's like they're speaking English, but you don't know what they're talking about. It's like when I go talk to my mechanic and two mechanics are talking, and I'm like, you guys are speaking English, but I don't know what's happening. So personal finance, exactly like that. I go to the bookstore, I open up a personal finance book. I said, these are English words. I can pick out individual words that I understand, but when I read the sentence, it's all gibberish. So I said, I'm going to pick a book where I can actually understand it. Because if I can't understand it, the book is useless to me. So the first person I bumped into was Peter Lynch, who was a fund manager at Magellan, and he wrote One Up on Wall Street and Beating the Street. And it was written in the same fashion as my book. It was very sort of to a very beginner reader, explaining how the stock market worked, how companies are evaluated, how businesses generate revenue, have expenses. And it was very straightforward. And I said, I can understand this. And he said in his book that his mentor or someone he looked up to was Warren Buffett. And I lashed onto that name. And I started digging up everything I could about Warren Buffett. At that point, he didn't have a website. It wasn't, again, no podcasts, no YouTubes, no CNBC interviews. It was just, I need to dig up information on this Warren Buffett fellow. And I got a copy. It was like, I started digging on the forums, and someone had these photocopied papers of his writings from his annual reports. And I downloaded them and I started reading them. And then I met Lawrence Cunningham, who is an author who compiled them into the Essays of Warren Buffett in the 90s. I met him then, and he gave me a copy of the book, and it was all compiled in one book. And I just started reading and reading and reading. And then Warren Buffett actually mentioned that his mentor was Benjamin Graham. So then I had to go there again. And so a lot of my education came from reading really 1930s, 40s, 60s, 70s, 80s ways of how they made money. And surprisingly, still stands the test of time today, which is fantastic. But that's where it all started from, where it led.
So you leave college, or you dropped out of college, I'm not sure which. It certainly didn't hold much interest for you. And you ended up in a job first, didn't you, to get some cash to get started with? Is that when it really crystallized that this is definitely not what I want to do?
Not yet, but yeah, it sort of did. Because when you're in your early 20s, everything is new. Even work after 30 years is different than work after 3 months. So what happened was I went to engineering school. I studied engineering, and at that point I was reading so much extracurricular stuff on personal finance that every course that I took in engineering seemed less and less relevant to my future. So my marks started declining. It peaked in high school in the 90s, and then down to the 80s, and then I failed out second year. My parents were extremely disappointed, being immigrant parents and coming here for me to have a better life. I actually re-enrolled and just sort of held my nose and just slid by and graduated with the diploma. So I graduated with the engineering degree and immediately took that engineering degree. I didn't go to convocation. I just threw it in a closet. And then what I did was I actually tried to start a business, because I knew that people didn't work 9 to 5 and became wealthy. A lot of them were entrepreneurs or investors, and I didn't have any money to be an investor. So I figured, well, let's be an entrepreneur. Let's try that. And at that time, it was 1995 or 6. Email was new. People were like, wow, email, this is incredible. And you can actually coordinate things on email. I can tell someone to meet me, tomorrow at 9 o'clock, and I don't have to stand by a payphone, So that was new. And then we started providing technology services or internet services at that time to the newly formed internet for the public, for companies. So we worked for large multinationals building companies, websites. And what happened was that boom, as you remember, the dot-com boom carried us all the way up to 2000, 2001, and then it all came crashing down. And that's how I made a lot of money, actually. I was very fortunate to have a business at that time, which got purchased. We made some money. I got a lot of shares in the parent company, but it all went to zero as soon as the dot-com crash hit us in 2001. All those tens of thousands of shares became worth, from whatever money it was worth down to zero overnight. So I had to figure out what I wanted to do by then. But by then, I already had a plan. So I wasn't spending all my money. I wasn't investing in .com because I had read Warren Buffett. I knew how to interpret financial statements. I looked at all the financial statements of all these different companies. I picked individual companies, but all of them were outside of the tech sector just because of the valuations. I built up a small grub stake. And then when everything came crashing down, I had a cushion to sort of help me think about what I wanted to do next. So that's really where it led me at the beginning. So from failing school to starting the business to having a grub stake and then going through that first downturn, that first crash where I learned a lot of lessons, because that was since Black Monday, which I experienced as a high school student. I had not experienced a crash with my own money on the line. That was a very interesting experience.
What I like about the book, you mentioned you read the financial statements. You go through in the book exactly what it all means, what a margin is and all the rest of it, so that people can decide whether a business is the right business to invest in, if that's the way you want to go. But overall, you say that the market always comes back and people panic, and this is one of the big mistakes people make.
That's correct. Unfortunately, that is true. I think, I can't remember, I think it was Morningstar that did research saying that the U.S. index has had an average annual rate of return of 9.8% over the last century. And some people have looked back even further and said that it's actually longer than a century. but the average annual return of mom and pops or the average investor is less than half of that. So what happens? Like, why is there such a big discrepancy from the market as a whole and from the individual investor? And they said a big component, two big components. Number one, expenses. The fees associated with the vehicles that people are using to invest in the market. At that point, I remember back in the 90s, fees were 2.5%, 3%, 4% a year. So you can imagine if you take away 4% of your 9% return, there's not much left. And number two, people panic. So that's why it's less than half. The fees were taking away a third, and then fear was taking out another third. So people were left with a pittance after that, barely above inflation. So I recognized early, and Warren Buffett, he doesn't say it explicitly, but through all his lessons, the underlying assumption, this is where you have to read between the lines, and same thing with John Bogle, the inventor of Vanguard's U.S. index fund. The underlying assumption is that the U.S. market always recovers. It's never different this time, and you need to hold the line and stay the course. If you can do that, you will be within the 98th to 99th percentile of investors just by doing that. So I took it on blind faith. I decided to replace my school indoctrination with the indoctrination of John Bogle and Warren Buffett. I'm going to put my faith that the U.S. economy will continue to be productive and that the market always recovers. Because what other choice do I have? And also when I was 20, I said, well, if I lost it all, it doesn't mean anything anyway because I don't have that much. So losing nothing of nothing doesn't matter.
Yeah. But you've taken all of the things that you've learned and you've put them into financial freedom. So there is a big time saver there, especially in the audiobook version because there's no reading. Yes. It is all there. But having said that, though, when people do panic, there's opportunity there too, isn't there?
Unfortunately, that is true. So when people panic, they tend to sell prematurely. And people get scared. I totally understand. Not everyone has had the education or the financial literacy training. So they get scared and they sell. And for those who are financially literate, that's an opportunity. If you can buy a productive asset at 100% of value, you might or might not be interested. But if tomorrow it becomes 80% less, 20% less, 30% less, 50% less, you'll be more interested. And that's generally how people become wealthy. And this is what I mentioned, that money is not real. For example, during the dot-com crash or during the U.S. housing crisis, when house prices fell or stocks fell, is a stock worth $100 that day, or after the crash, it's worth $50? Which one is it? The answer is it's both. At one time it's worth 100, and the next time it's worth 50. That is what the market has decided it's worth. And if you can purchase it at the lower price, there's only upside for you, because every time the market goes down in price, you're reducing your risk. The risk of loss goes down, right? And because you're not buying individual stocks, which can go to zero, the U.S. market has never, over 200 years, gone to zero. It's only collapsed by certain amounts. And 50 being the largest that I experienced during the dot-com crisis, as well as the Great Recession, the credit crisis. It goes down by half, and then it just returns. So if you can just start increasing your purchases during those times and not give in to the fear and know that the Western economy will continue to recover and do well, you have a huge advantage over people who just simply sell. Because the problem with selling, there's two problems. Number one, you think you're avoiding the crash, and maybe you are, right? So let's say you give them that. You say, yeah, you've done a good job. You've avoided the crash. Now the question becomes, knowing that the economy will recover eventually, when do you go back in? Nobody understands the second part of the equation. Sure, you sell, and you've minimized. Instead of losing 50%, you've lost 30. That's great. Now when the market turns and shoots up by 300, 400, 500%, when did you get back in? Most people, they stay scared way beyond any potential recovery. And this is why they do so poorly, and why those who are financially literate just take advantage, because they're never selling. They almost never sell. They're holding on, and then when there's an opportunity, they accumulate more. So when the recovery happens, their more becomes even larger. And that's why the wealthy get wealthier. Unfortunately, or fortunately, it's just the way that happens to work.
Where are the opportunities right now during the pandemic?
Surprisingly, I've been keeping my eye out and I haven't seen anything that strikes me. Again, opportunity is not, and that's a fantastic question. Everyone always asks me, where do you invest in now? Opportunity is not made for everybody, right? There are certain things that I'm good at identifying that others are not, and vice versa. For example, yourself, you can see a trend in the audiobook market faster than I could. I can only see my little niche about where that's going or what people are talking about. But you can say, wow, I'm seeing an influx of these type of books, or I'm seeing an influx of those type of books. And you'll have a much better ability to identify that opportunity. For myself, I focus on 2 small markets, maybe 3 in real estate. And I look at the US market in general. I no longer pick individual stocks. I've taken that risk out and I buy the market. So the market seems healthy. It doesn't seem to be, the last time I purchased anything from the stock market was in February and March, when the virus crisis took everything down. That was a clear opportunity. A lot of people sold, unfortunately. And now, because I think of large, heavy government stimulus or the promise of such, the markets aren't reacting. They're thinking that whatever happens, the government will save them. So that's why I don't think there's a weakness in any asset in particular yet. Who knows in the future when the governments decide to step in and say, wow, we can't stop this. So that hasn't happened yet. Everything seems to be, we might be Wile E. Coyote right off the cliff and we're just churning our legs. We don't know yet until after the fact. But right now, there's no clear opportunity for me. I know that Alberta in Canada, in the oil country there, in the middle of Canada, is having a lot of challenges, not only with the virus crisis, but with the price of oil being what it is. I know people who own real estate in Alberta are suffering, but again, they're not dropping their prices. So they're well capitalized at this point. So right now, I'm just looking, seeing what happens.
How old were you when you made your first million, Jim?
That's a good question. It was a little over, I was probably 32, 33. And again, that was mostly because of 2 things. I purchased real estate shortly after the Toronto housing crisis. We had our housing crash ending in the mid-90s. So when I graduated, the housing market was already decimated. It was a 30% decline on average, but some homes in my neighborhood were down by 50 or more percent. Wow. So real estate was cheap back in the mid-90s. So I purchased, I said, and you can tell this is how I could tell. I didn't look at any income statements. I just looked at, if you know the geography of where you live, whether you live in Nottingham or if you live in Toronto or if you live in Montreal, the downtown core in general, the real estate is more expensive per square foot than a suburb, than something 40 minutes out. That's in general. But at that point in time, the real estate in downtown Toronto on a per square foot basis and real estate 40 minutes out was the same price. And that's what happens during actually a crash. The prices get dropped by everything, they just flatten like a pancake. So I said, well, either there's a price problem here. Either the downtown condo is underpriced or the suburb condo is overpriced. So I don't know which. I'll just buy both of them because they're going to separate out eventually, because that's what happens in a bull market. The price of real estate starts separating out. The higher density areas become more expensive. The lower density, less resources area becomes lower in price. And that's exactly what happened. That's number one. And number two was the .com crash was my first, like I mentioned, and I started buying more stock. I bought more Berkshire Hathaway, more King World Production, more individual stocks. At that point, I was only doing individual stocks. So I bought more of the companies that had strong financial statements. All the tech companies died. And then when I came out 2003 or 4, I was in my early 30s and everything recovered as Warren Buffett told me it would. And the number just sort of cruised past $1 million. And I just kept repeating. It was a rinse and repeat method where I just kept waiting for the next opportunity. And between the opportunities, I just sort of spent my time doing nothing, really.
And how did your lifestyle change at that point, but that you became a millionaire?
Surprisingly, it doesn't change too much. I was never a type of person who wanted to buy the fancy car or have the most up-to-date clothing or the current season's clothing. Or I just wanted to have the option of not to work. That's really my entire goal. I remember when I was a kid, a lot of people asked me, "What's your goal?" They would always ask myself and my peers and my cousins, "What's your goal? What do you want to be when you grow up?" And I got so tired of that question from my relatives about how are you progressing on your goal. And I said, listen, my goal is to have no goals. That is my goal. My goal is one day to I have no goals whatsoever. Stop asking me that question. And so basically, sadly, I actually attained that goal. And that's not what it's cracked up to be. But anyway, that's besides the point. But yeah, so I didn't have a need to maintain a very expensive lifestyle. So I was still spending very little of that money. It was all tied up in assets anyway. And I learned something then that I didn't like liquidating assets to pay for my lifestyle. Because if you only have assets, the only way to fund your expenses is to start liquidating stock, right? So that's the only way to do it. I didn't like doing that. So I went back to work. I didn't need to work, but I went back to work and I tried to figure out a way where I could find assets that would pay me so that I didn't need to liquidate assets. And then real estate came into the picture at that point, just by coincidence.
And you talk about when you go into real estate, you don't buy one or two doors, you buy many.
That is a big mistake. A lot of people, again, they make the mistake that real estate is an asset and every real estate is good regardless of the price, and they pour all their money into one or two doors, and when they have a vacancy, they have lots of trouble, lots of nightmares. That's not the way to do it. Because my education was in reading financial statements, I knew what a good deal was. I could identify it very quickly. But just by looking very quickly at the price, how much rent it generates, the expenses that I could probably incur from owning it, and I knew how much my profit was. So I wasn't seeing any opportunity, but people were buying real estate, especially in Alberta, when oil was like $150 a barrel, and America, where there was free money everywhere. People didn't understand what they were seeing. They just thought a house is free, it must be good, zero down, all this other stuff. And I just sort of sat there and I said, I want to buy cash flowing real estate, but there's no opportunity here. So I just kept about my business until there was a U.S. housing crash. And then at a certain point, the prices became attractive where I knew that if I purchased these properties, they would fund my lifestyle. I wouldn't have to sell anything. They would produce American dollars for me. I live in Canada, which is the currency is typically weaker here. So I would be earning something equivalent to like, US dollars or British pounds while living in a country that only uses Canadian dollars. And I made sure, I said, I don't want to be at a position where I own one door and, there's a vacancy and all I have is just an empty property. So I started buying. I was buying repeatedly. I needed to hit a high number so that if I lost a third of my properties, it wouldn't make any difference. So I just kept acquiring them until I felt like I hit double-digit number. I think it's important to have at least 10. I mentioned this in some of my videos. If you're looking to invest in real estate, your goal should to have at least 10 doors. Because if you don't have at least 10, vacancies will hurt a lot. Unexpected expenses will hurt a lot. Changing the roof will hurt a lot. If you have 10, 15, 20, 30 doors, at that point, you have to fix one or two. There's really no issue. So once I hit that number, it funded my lifestyle and then some. Then work definitely became optional at that point.
And that was it. You really were on your way then. Yeah.
Yeah, it was. It was a lot of fun.
In the book, you explain all the formula you use. You take it's all step by step when you decide whether a property is going to be a good rental property, and it's all in there in Financial Freedom. It's all laid out nice and simple, not like listening to two mechanics or two doctors talking. It really does make a lot of sense, which made it very easy for me to read because I understood it. I mean, I have done audiobooks where I haven't understood a lot of what's gone on. It's because, a lot of there's a lot of jargon. But that was not the case with your book. I just want to make that clear to someone who's thinking about getting the audiobook that you don't, that that Jim, it's my voice, but it's Jim's words, take you through step by step. And you know, you can rewind it and listen to it again and stuff, but it really is nice and basic. It's written in everyday language that pretty much anyone with a basic education can understand, because it just all makes logical sense, and it all just goes step by step by step. And it's a shame, you mentioned education earlier, that we are not taught financial literacy at school. Why do you think that is?
That's a great question. And first, thank you so much for mentioning that. And I'm glad that I accomplished that of making it easy to understand, because I was writing it in the perspective of when I was 14. I said, if I picked up this book as that 14-year-old and I was desperate to learn how to improve my financial literacy, what would I need to read in order to sort of have the easiest path to understanding this asset class? So I wrote it with myself in mind when I started. So thank you for recognizing that. And number two,
it made my job as a narrator much easier.
I'm glad. With regards to the question about the education system, I mean, if you just have a look at the Education Act of 1870 and you do some searches online, education wasn't, the purpose of it wasn't necessarily to have people become financially free. It was the opposite. The concept of the factory school. In Prussia, they called it the factory school. So before the factory school was created, most of us were farmers. It's an agricultural-based society. We worked with our dad or our grandparents and tended the farm. We did what they said. We got up. We did our work. We went to bed. And industrialization changed that. Some of the industrialists who were starting businesses, manufacturing goods and services for the growing community, said, we don't have enough workers. Everyone doesn't want to come into a factory. They would rather stay home with their parents or grandparents tending, the cornfield or the farm. We need to sort of do something so that people are mandated for an education that suits them to work in my factory. So the government and the industrialists worked together about the Education Act of 1870 was how it ended up, where it was mandatory at a certain point. I mentioned this in the book, where it's mandatory to send your child to school. You had no option of saying you can stay on the farm and you don't have to go to school. It was mandated that you have to go to school. Your kids must be sent to school. The church had an issue with this because they concerned themselves with a third of the population which were more poverty-stricken, and they didn't want to lose influence over that segment of society. So they said with the government, listen, I don't mind you doing that. Let's work together. And the school system was split up into a Catholic system and a public system. So the public system and the Catholic system today, the education is very similar. But in general, what the industrialists wanted was someone who graduated from the system, quote unquote graduated. It was gamified so that people sort of leveled up. As you level up, you get an achievement, you feel good, and you want to go on to the next level. Sort of like trying to convince a cat to come to you with food. So they didn't teach skills initially. What they taught was proper behavior, how to arrive on time, punctuality, how to arrive in a state where you can work effectively. That means not being intoxicated, not being on drugs, being a good worker, how to learn to take orders or commands from people who are not related to you. Because your manager is not going to be your grandfather or your grandmother anymore. It's not going to be your dad or your mom. It's going to be a stranger. How do you take orders from them and behave in a professional manner? So it was 90% concerned with etiquette, because that's what they needed in a factory. They wanted people who came on time, were effective at working, and could take orders from someone who's not related to them. And that's how the school system was built in order to produce the workers that they needed. So financial literacy and being financially free is the entire opposite of what they would want in a worker. They want someone who says, listen, time is associated with hours spent. I work this much time, I get this much money. And the industrialists knew that money was not associated with time, but they wanted to fix that in the mind of the worker, because that's how the worker felt that they needed to make more money. I need to work harder. I need to work longer. That's how I make more money. And they knew this was false, and they didn't want financial education to get in the way of that learning. So they just kept quiet. The workers came out, and then we had a boom in the Industrial Revolution, and then the Technological Revolution, And we had a lot of workers who now, again, the indoctrination states to this day, if I want to make more money, I got to work harder, longer, more hours, evenings, weekends. And that indoctrination persists to this day.
So how are you now with your daughter? What's your daughter? She's 9? She's in the education system. So how do you balance what you know with what she's being taught?
So that's a very good question. So yeah, I understand that it's mandatory for children to go to school. So I have no problem with that. So I just put it in context. I knew that when I grew up, when I was going through the education system, I would learn things by osmosis. You need to work to make money. You need to study hard to get a good job. You need to do this and do that. So I would just sort of counter the indoctrination with some of my own. So when she says, like, Daddy, how come you're not working? What is working? So I would introduce her to the concept of what is working and how they're trying to associate money with time. Whereas you can see me, I'm clearly not working and we have money. So where does that come from? So she had to think about it. And so it sort of opened her mind to different ways. So she now understands, money, making money, how investments and assets produce goods and services, how marketers make money. It's not just they're just trading their time. They're leveraging a lot of things. They're leveraging an audience. They're leveraging a following. They're leveraging a value. And that's how money comes. It's not tied to, I spent 5 minutes here, it must be worth $2.50. They're not. She's not doing that. And also, I have to sort of counter all this stuff in terms of selling. The two most important skills in life that is not taught in 25 years of school, which is shocking to me. You go through 2.5 decades of school and you don't learn the two most important skills: financial literacy and selling. Selling is very important, if only for the ability to convince someone to give you a job. If only to convince someone to give you a job, selling has paid for itself.
But then even when you've got the job, it's about selling. I mean, I've been the program director at many radio stations, and you have a general manager who controls the purse strings. And if you want to get something on the air, or you want to hire a new presenter that you know is going to make a difference, or there's a promotion or something you want to do, you've got to sell that to him, or you're not going to get the budget to do it. Selling is, even when you get into a job, is still everything.
Brilliant. Exactly like you said. And when did you learn that in school?
You never. But you have to learn it pretty quickly, or nothing's going to change.
That's right. And you would think that because it's such a key facet of almost every industry that we would learn it at an early age. But we're taught the opposite. We're taught, fly under the radar. Don't talk to strangers. Keep quiet. Be heard. Don't be heard. Just sit there and you have 2 ears and 1 mouth. That means you need to listen more and speak less. So we're told the opposite. Oh, that person's shy. There's no test that definitively defines someone as shy. There is no test that says someone is an introvert. People have programmed, and we've believed it. You need to trade time for money. We've been given this information, and we just take it for granted. It's almost like gravity. We don't even think about gravity. We just assume that it affects our life. Money is associated with time. You're introverted. Don't talk to strangers. So the first thing I did, I remember one of my first lessons when my daughter was 6 years old, I said, you're going to talk to a stranger. And she was like, she was terrified. She was 6 years old. And I said, I'll tell you one thing. No matter what you want, a toy, a sticker, to have a donut, you're going to have to talk to a stranger, if not to pay the bill, to ask someone for the money. So you're going to have to learn how to talk to a stranger, because in life, I explained, I said, no matter what you want, a house, a car, a job, more money, you're going to have to talk to a stranger, and you're going to have to convince them that there's value in it for them to do what you're asking. And so I started off the lesson very, very sick. I don't know what to say. I said, it's very simple. We're going to look around the coffee shop. See that lady on her phone? All you need to do is walk up to the lady and say, hello, introduce yourself. My name is so-and-so, Isabel. Do you happen to have the time? And then when she tells you the time, you're going to remember it and say thank you, and then come back to me and tell me what the time is. I mean, I could look on my phone and find out what the time is, but she needed this practice. And it was a very simple script. So she literally spent an hour pacing. She was so nervous. I was like, this lady's going to leave because it's been an hour. But she stayed there and she was looking through her phone. And eventually my daughter came up to me and said, what do I say again? What do I say again? And I just kept repeating it. I didn't tell her, I didn't pressure her. I just said, do it whenever you're comfortable. I know you can do it. You're doing fantastic already because I can tell you're thinking about it. The fact that you're thinking about it means you're a step ahead of everyone else your age. So she was very proud about that. So she went up there and she said the words. She said, hi, my name's Isabel. Do you have the time? And then as soon as the woman gave the time, she turned around and ran back to me. She didn't even say anything. As soon as she got the time, she just came back and said, Daddy, it's 4:30. And I was like, okay, fantastic, great. And the woman was looking at me, and I was just like, hello, thank you, sorry about that. And but after that, she was beaming. She was so proud that she was able to. And I didn't say anything about, oh, you should have waited, acknowledged, and thanked her, and then came back. And she did that much. I was very proud of her. I said, I shouldn't be proud of you, actually, because I didn't do anything. You did all the work. You should be really proud of yourself. And so she was. And that's how we started. And over the last summer, it's evolved from that process of selling. And she was selling toys at the park during the COVID shutdown. When she saw people, she would sell toys and she would make money. And so she's learning the fact that that's an important skill, to convince someone to help you out. You're going to need help in this world.
And it's not a skill you're taught in school, as you said. It's something you have to pick up along the way. I lived in the northeast of England twice, actually. It was 2 different radio stations I worked at up there, and they have a great saying up there. A very young baby or very young kid is known as a burn. That's a burn. It's a Scottish word, but in the north of England, it's a burn. And they have a saying up there. They have an expression. It says, "Shy burns get nout." Nout means nothing. Shy burns get nout.
Wow.
And it's very, very true. It's a very working class area. It's a shipbuilding was the original industry up there. But shy burns getting out, and that's it.
Interesting. That's fantastic.
Shy kids get nothing is the direct translation.
Opposite. That's the opposite of the indoctrination that I got as a kid, which was like, don't talk to strangers.
Yeah. Oh no, this isn't in school. This is not said in school.
So
this is
interesting.
People up there
in the community
as a survival thing in the community. Yeah, and it's more valuable than most of the things you learn at school. Yeah. So Jim, the book Financial Freedom, it takes us through what you did from the epiphany at 14, from the education, the learning from the likes of Warren Buffett, the actual things you did, the opportunities you got. What was the biggest thing you got out of the process of writing the book?
That's a great question. So I wasn't supposed to write the book. That wasn't the intent. That no one knows this, but I didn't go out thinking I'm going to write a book about everything I know, because it was just daunting. So what I did was actually what happened during the virus crisis. I went on to social media because I'd never been on social media. You can't really find me I'm not on Facebook. I'm not on Snap. I'm not on Instagram. I only started during the virus crisis when everything was shut down. So I got onto TikTok and I got onto Instagram, but really Instagram is just a copy of all my TikTok videos. So it's really from TikTok. And I started just saying, I don't know what to do on this platform, but it's a 15 to 60 minute platform where I can provide maybe a bit of learning that a mistake that I made that maybe other people don't have to make. And it's 15 to 60 seconds. I don't have to write anything. I don't need a microphone. I don't need headphones. I just have to film something, shut it down, and I can send it. And then people started watching. I was surprised. The lighting was terrible. I was in my car. It was dark. I didn't understand lighting. I didn't understand sound. I was yelling or speaking, and people started watching the videos. Like, wow, that's really great. Can you give me more information about how to sell, more information about how to invest? And I never thought about that perspective. A house is not an investment. I never thought the fact that landlords don't set the rent and the market-driven, open market, closed market, local market, global market. I don't understand all this stuff. How would you do that? And then as the videos piled up, I think I was at around 300 or 400 videos, people started asking me. They said, Jim, you have so many videos. can you put it together in can you put the learnings in an easy to manage format? Because I can't go through 300 videos. Do you have a book or something that I can read so that it has all the learnings in a single place? And I said, I don't have a book. And I said, will you write one? I said, no. And they're like, why won't you write one? I said, listen, I've worked really hard, decades, to become financially free. I'm not going to be working, period. And they said, and I said, listen, and enough people started asking me. I hit over, I think, 800 videos, 900 videos. Then people started really asking. I said, listen, if you guys are serious, and I don't know if you are, I'm going to log into Amazon, Kindle Direct Publishing, KDP. I'm going to set up a pre-order because I didn't know that you could do this. I just saw it in a TikTok video, ironically. You can set up pre-orders. So if people actually want your book, they can order it. And I said, okay, if you guys are serious, I'm going to set up a pre-order. Here is the pre-order. Order the book. If there's enough orders, I will write it. Otherwise, I have other things to do. Like I have to take my daughter to school. I got activities. I got stuff to do. And people started ordering, 1, 2, 1 dozen, 2 dozen, 3 dozen, 4. It kept going. And at a certain point, I said, I made a video. I said, I guess you guys really want me to write the book. I have to write the book. And writing, I'm telling you, as from someone who doesn't write, is hard. It is so hard. Speaking of 15-second video is easy. I can just say something and I can just shut it off. Writing it, and I got some tips from TikTok. I started searching on some of the self-published authors. They were teaching me stuff like using Grammarly, how to use Grammarly effectively, how to use the Kindle platform, and then Word format, how to format things. So I wrote the book, and then at a certain point, some people wanted an audiobook version. This is how we met. I don't know if you know this. So I thought I was done. I had my ebook, I had my paperback, which is using the same manuscript, and I put it to bed. Then some people started coming out of the woodwork. Jim, I would love to read your book or listen to your book while I'm driving or before bed or where I'm cooking. Right? I have my hands busy. I can't flip pages. And I was like, I never even thought of this concern. I'll be honest. I never thought about this concern about wanting to learn something while you're driving, wanting to learn something while you're preparing dinner, wanting to learn something. I've never thought of this problem. And I just said, I have no idea how to make an audiobook. I really don't know. I have no idea. And then I had to do some searches. Again, I found ACX, and they walked me through the process. Fantastic, how to. And then I met you, and that's all she wrote. And so.
And now Financial Freedom is an audiobook.
Yeah. So that was it.
From my point of view, I think what might be great is the fact that you are not an author.
No.
And I'll tell you why. Is because I worked most of my life in broadcasting.
Okay.
And when you write for broadcasting, it's different to when you write for print. When you write words that have to be read out loud, it's a different discipline. And the basic differences are that because radio broadcasting is a linear experience, by and large, you don't go back and listen again, especially live radio. You get one chance to hear it. So it has to be written in such a way that you can grasp whatever it is the person is saying, whether it's a commercial or a news item or whatever it is, on the first pass. So you have to use language that doesn't take you to go, hang on a sec, I don't know what does that word mean? So you have to use very simple language, very short sentences. And probably because you are not an author, you wrote the book, which made it a joy to read out loud, because I'm used to reading broadcast copy. It was like reading broadcast copy, which means I think when you listen to the audio book, you really don't need to go back too many times. Maybe if you just want to reinforce a concept, yeah, sure. But for the most part, you can get the concepts straight away, because to me, it looked like broadcast copy, having worked for so many years in broadcasting. So thank you for that, Jim, from my behalf, but also on behalf of the listener. I think you made it something very, very easy to digest as an audio thing. Some of the audiobooks I read, they're good books, but some of them I know, if I was writing this for broadcast, I wouldn't use those words. But you didn't. There wasn't anything like that in your copy. None at all. Probably accidentally, but hey, take it as a compliment.
Again, I
Yeah.
wrote it with myself in mind as a 14-year-old who didn't understand anything. I needed to write it in a way where not only I could understand it, but I could also flip back and reread something, and it'll make more sense as I read it once, twice, or three times. I'd be like, okay, now I get it. I can move on.
Yeah.
So I wrote it in that fashion.
It's
So
like
thank
you
for
took
that.
all that learning from the life experience and from the likes of Warren Buffett and some of the greats, Bogle, etc., and you condensed it into something that was real and really easy to understand. And now it's an audiobook for people to do just that when they're driving, when they're doing jobs around the home, or if they've got a repetitive job. You can just stick the pods on and literally change your life just by getting the information.
And I've gotten comments already from people who have already subscribed to Audible and gotten the book, and they said like, "Oh, I love the book, so thank you so much." They love your narration, and I've been getting video direct messages already, and I didn't expect it that quickly. They're like, "I was the first one. Once I saw that link, I just went and got it." So,
well, I'm going to put a link in the blurb in the bottom of this YouTube video where if you click on that link, and it will take you to Audible. And if you sign up for a 30-day trial of Audible, you can get the book for free. You can download it for free. In addition to that, if you're quick, now this video, as most YouTube videos, will have a long tail and it'll be around for a long time. And people might be just discovering Jim Chuong right now, and you're 4 years, 5 years, or 10 years in the future, because the principles don't change. As Jim said earlier, the principles in this go back to like the 1930s. They haven't changed. So it doesn't matter if you're looking at with the date that this was posted and you're 10 years in the future right now, this stuff is absolutely guaranteed to work, because it's worked for Jim and it continues to work, and the stock market keeps doing what it already does. So if you are one of those people, go into the link and you can get the audiobook now. But if you are one of the first people to see this video, if you are one of the first 10 to email me directly, I will send you a code and you can have the book absolutely free without a connection to Audible. Now, my email address, I'm going to put it down the bottom. It is graham@mackmedia.co.uk. But I'm going to put that email address there. I won't say why it's there, because if you've got to the end of this video, you'll know. And it means that you're one of the early adopters. You'll get it first. If you're one of the first 10 people who get it for nothing. But if you're watching this in the future, then click on the link to Audible and sign up for the 30-day trial. I'm sure Audible will still have, assuming they'll still have that deal on. If they don't, and you're watching this in like 10 years, I'm really sorry. You know, you're going to have to pay full price for the book. But it'll make its money back. It'll change your life. It'll be worth it. Hey, Jim, that was fun. That was a lot of fun. Thank you very much. I think you'll change people's lives with this thing, because I certainly learned a lot. Made me feel a bit silly, because I've had it wrong for a long, long time. Just everybody around the wrong way.
That wasn't my intent, Graham.
No, but that's okay, because I was reading it.
We all had to figure. I had to figure it out. I a lot of learnings, had a lot of mislearnings. It happens.
And it's never too late or too early to start. Never too late, never too early to start.
Yeah, as long as you sort of move to the right direction, it's all good. Just, you're not on the wrong path anymore. You're moving towards the right direction. It's all good.
Jim Chuong, thank you very much.
Thank you, Graham. A pleasure.